David, welcome back. It's good to see you again. Let's start with NVIDIA. Are you a buyer here?
Yeah, Kelly, I like NVIDIA long-term here, but I think that investors need to understand that price volatility may be the norm moving forward, especially given current valuations. I mean, in this AI space, there's going to be winners, there's going to be losers, but it's a huge market, but there's going to be wild swings in prices and crazy valuations. And what does NVIDIA have? Well, probably a crazy valuations in the eyes of most people. But I think that's why it's really important that investors need to understand the bull case around Hopper, because I do think that GPUs moving forward are going to continue to drive positive earnings revisions. Basically, what I'm trying to say is that there has never been a data center sales cycle that has lasted less than 1 year. So this past quarters, it shouldn't be a one event pull forward of earnings and then they fall off a cliff next year. I do think that this is sustainable, pardon me. But the biggest point that I can make known here is that there's probably going to be air pockets in this name moving forward. But that's the risk of buying at this valuation. If there is an air pocket, say on earnings guidance, which is probably inevitable, the stock could pull back, 20% here. But Kelly, I do like NVIDIA here, though I recently trimmed it because I don't want to subject my investors to all of that volatility.
All right, let's move on to another one. The world's most valuable company, that would be Apple, sitting at a market cap of $2.8 trillion, leading the exclusive $1 trillion club. Do you see more upside here for Apple, or are you a little more cautious?
Tyler, there's a lot of, convicted thesis for Apple here. I mean, it's very polarizing. Apple's a name that I'm definitely not going to be betting against from a technical perspective. The technical perspective, well, it's very strong here, and I'm following the tape here, even at current valuations. I do think that AR/VR front, the developer conference next year is going to be the focus. It may not be a large financial impact, in the near term, but from a sentiment perspective, it could definitely show that, hey, you know what, Apple, it can still innovate. So I'm not betting against this name.
So for our third stock, David, we asked you to pick a company that you think could join the $1 trillion club. What is it?
It's going to take a little while. It's only about, 500 billion in market cap right now, but it's going to be Visa. I believe that, the combination of double-digit revenue growth and mid-teen EPS growth, and the stock trading at a pretty sizable discount versus its historical multiples is definitely a reason, to remain invested in this name. I mean, it checks a lot of boxes for this type of market environment right now. I mean, all told, the company's ability to protect the bottom line in a variety of macro scenarios alongside a reasonable valuation that's only at 30% versus the S&P 500 on a premium standpoint, when it tends to trade at a 50% premium, are all definitely reasons why you need to remain invested in this name.
Very good. David, thanks. Good to see you.